Hey guys, if you just started learning how to trade and when you jump on the chart you look at all these different candlesticks and you have no idea what they mean, well, in this video I will teach you how to understand and read candlesticks. I will go over all the different characteristics so when the next time you jump on the chart you will have a better understanding on reading the candlesticks. Okay guys, so let's get straight into it. First of all, I want to start with the anatomy of a candle. So what you have in front of you on the left is an example of a bullish candle, and the one on the right is an example of the bearish candle. Now both of these candles, between the bullish candle and the bearish candle, they share exactly the same anatomy. So both of them have top wick and they have bottom wick, and they also have the body of the candle. Right now, although they're exactly the same in terms of anatomy, the way the body of the candle is made is slightly different between the bullish candle and the bearish candle. And what do I mean by that? Let me show you. So let me explain to you. Let me start with the bullish candle. So the bullish candle, the opening price makes up the bottom of the body, and the closing price makes up the top of the body. Now, if you see the bearish candle, the opening price makes up the top of the body, and the closing price makes up the bottom of the body. So that is the difference between the bullish candle and the bearish candle, is where it actually opens. So the bullish candle always opens from the bottom of the body. The bearish candle opens from the top of the body. And the bullish candle closes at the top of the body, and the bearish candle closes at the bottom of the body. Now the highest price between the bullish candle and the bearish candle is the same. The highest price actually makes up the top wick. And the lowest price between the bullish candle and the bearish candle is also the same. It makes up the bottom wick, as you can see. So what you have here in front of you is an example of some candlesticks with different characteristics. And with that different characteristics, I hope by the end of this video you would get a bit of a general idea on what the candlestick means if you see them on the chart, right? And what is the probable price direction after you see that candle. Okay, so let's start with this one. This one is an example of a bullish candle with a big body and a long bottom wick. Now, if you see this kind of candle on the key support area, and I will actually explain to you what a support area is in another video. But if you actually see this kind of candle on a good key level of support area, you could be quite certain that the potential price direction after this candle is to continue higher. Why? Because wick always let me rephrase. So wicks normally or generally are interpreted as rejection, right? Now because bullish candle by nature it actually wants to move up. That means when price opens here, as we discussed before, it's bullish candle always opens at the bottom of the body. When it travels lower, it has a clear rejection higher, right? Because it just refused to go lower. Otherwise, the price would have actually closed somewhere down there, right? But no, price actually closed all the way up there and has no top wick, right? So which means that it actually goes all the way up and it has no rejection from the top down. So that's why I put the illustration here, a strength meter, to give you an idea on how powerful or what is the strength of this candle. So it's not the strongest, but it's still quite strong. And the probability price direction, if you see this candle, especially on a key support area, the probability price direction to go higher is high, and the probability price direction to go lower is quite low. The next one, you can see an example of an indecisive candle, I call it. Why? because it has a very small body, right? It has a long top wick, and also it has a long bottom wick. Now, I explained to you before that wicks, it could be interpreted generally as rejection. So I want you to actually picture this. Price opens here. As I mentioned before, a bullish candle, the price makes up the bottom of the body. So it opens here. It moves all the way down, right? And it actually got rejected all the way up here. Again, it actually rejected all the way down here. So it's almost, price opens here and it closes very close to the open, right? Which means that it's actually indecisive. It doesn't know whether it actually wants to go higher or lower. The strength meter, the strength of this candle, is very low. So the probability price direction both ways, to go higher or to go lower, is low for both directions. And the next one is an example of a bullish candle with a small body, but at the bottom, and a long top wick. Now I want you to actually visualize this with me. So price opens here. It has no movement down, but it moves all the way up, and then it actually got rejected, and it actually closed quite close to the opening. Which means when price actually moves lower, it is showing no rejection, right? In fact, it is actually showing rejection from the top side down. So price actually end up closing very close to where it actually opens. So if you see this, generally the probability price direction to move higher is quite low. In fact, the opposite is actually quite true. The probability price direction for price to want to continue lower is very probable because of the way the candle is forming. And the next one is an example of a bullish candle that has no volume or very little volume, right? It is shown by a short top wick, a short bottom wick, and a small body, right? The strength of this candle is very low and similar to the indecisive candle, but this is because there's not many participants yet when the candle is when the candle is actually open and closing. So normally you would see this kind of candle after the market has closed or before the market opens. Hence, I put probability price direction for price to continue higher or lower is actually low for both directions. Now this one is an absolute bomb in my opinion. Now it's actually a very strong sign for price wanting to continue higher if you see these kind of candles. So you can see that there's no top wick, a very short bottom wick, and then a very, very big body, right? So I want you to actually visualize this with me. So price opens here, it moves lower, slightly, not much, slightly, but it then actually pushed all the way up with conviction, with volume, right? All the way up here, and actually closes there as well. And actually, because there's no wick, it is telling you that there's no rejection from top down. So price actually closed very, very far from where it opens, right? So that's why I put down the strength meter. The strength of this candle is very strong. The probability price direction to move higher is very high, and the opposite will be true. That means the probability for price to want to continue lower is very low. Okay, so let's move on to the bearish candle. So this is an example of a bearish candle with a big body at the bottom and a long top wick. Now, because a bearish candle in nature, it actually wants to move lower, right? So you need to think of this the opposite of how you visualize the bullish candle, right? Now, the bearish candle, as I mentioned before, when it opens, it makes up the top of the body, right? Whereas here, and actually moves down, right? And sorry, it opens here and actually moves up all the way up, but it actually got rejected, right? right? And after it actually reached down here, and it actually closed down here as well, which means there's no rejection from the bottom up, right? So there's a clear conviction that price wants to continue lower. Now, this is not the strongest candle, but especially if these candles you see on a key resistance area, again, just like a bullish candle in a support area, I will explain to you in details about resistance as well in another video. So going back to this, it's not the strongest, but it's actually quite strong. But if you actually see this in a key level resistance area, you could be almost certain that the probability price direction to continue lower is quite high, and the probability price direction to continue higher is quite low. The next one is an example of indecisive candle, but in bearish format. Yeah, so again, it's actually shown long wicks on both sides, the top and the bottom, and a very small body. So again, if you want to visualize with me, price opens here, because with the bearish candle, price always open. Every time price opens, it makes up the top of the body, and it actually moves higher, and actually got rejected straight away, right, all the way down here. But then it also got rejected again and actually closes very close to the opening price, right? Because this is the close of the the closing price of bearish candle always makes up the bottom of the body, right? So that's telling you that a price is very indecisive. It doesn't know whether it wants to move up or down. The strength of this candle is very low. And then the probability price direction for both to go higher or to go lower is low for both directions. The next one, we have an example of a bearish candle with a small body, but at the top, not at the bottom, and a long bottom wick. Now again, I want you to visualize this candle with me. The opening price always makes up the top of the body because it's a bearish candle. And then it moves up, but it has no wick, right? So it didn't actually even had the chance to move up. Okay, it moved down, right, all the way down there, but it had a rejection from the bottom up instead, right? It actually closed quite close to the opening where it actually opens, right? Again, when I mentioned about the bearish candle, the closing price is always the one that actually makes up the bottom of the body, right? So that means if you see this, the strength of this candle for price to continue lower is very low, right? Hence the probability price direction. However, the opposite, the probability price direction to continue higher is quite likely, right? It's not 100% certain, but it's actually quite likely, because bearish candle, you would want to think that is actually a candle that wants to bring price lower. But however, it is showing weakness for price to continue lower. That's what it is saying. Now the next one we have is an example of a bearish candle that has low volume, right? Again, similar to the bullish candle of the same type. You would normally see these candle before the market opens or after the market has closed, right? It's shown by a short top wick, a short bottom wick, and a small body. Right, so I want you to visualize this with me. So price opens here, right? It moves up, not much, just a little, and it moves down, not much again, right? Just a little, and actually had a bit of rejection and actually closes here. But like from here, from the highest price to the lowest price, because remember when I explained to you about the anatomy of a candle, the highest price always makes up the top wick, and the bottom price the lowest price always make up the bottom wick. This range is actually not far, right? Which means that there's a lack of volume, lack of participants in the market at the time, right? So that's why the strength of this candle is very low, and the probability price direction to continue higher or lower is low for both direction, right? Now the next one, we have the strongest candle for price to continue lower, right? It is shown by a short top wick, a very big body, and no bottom wick, right? So I want you to visualize this with me. So price opens here, right? because bearish candle, the opening price always makes up the top of the body, and it actually goes higher, just slightly, right? Not much, just slightly, and then got rejected, but then it actually moved with force, right? With momentum, with conviction, all the way down here. But then, does it show any rejection? Is there a bottom wick? No. So there's no rejection from the bottom up, and then after it actually closes there. So you see how far price is from where it opens and where it actually closes. So this shows you the strength, the real strength of this candle is very, very strong. The probability price direction to continue lower is very high. And the opposite obviously is quite true, that probability price direction to continue higher is very low. Right? Now, I also want to introduce to you the concept of fractal. So in trading, because normally traders would pick, certain time frames that they like, right? I want you to understand that when you're trading and in any time frame, everything is fractal, right? Which means that you will always be a part of another schematic. You will always be part of another structure. You will always be part of another candle, or you are actually a bigger picture of a smaller play, of the time frame below you. So what do I mean by that? Let me explain to you. Yeah. So if you actually open your chart and then after that you look at, say you pick a daily time frame, right? You open your chart, daily time frame. So if you pick a candle, one daily candle, that daily candle is equivalent or made up of 6 of the 4-hour candles, which means that if you actually go down to the 4-hour candles, 6 of them actually makes up one of your daily candle, right? Does that make sense? And then if you actually look at the 4-hour candle in the 4-hour time frame, obviously, one of those candles is made out of 4 of the 1-hour candles in the 1-hour time frame, obviously. And if you go down another time frame, say you go down to the 1-hour chart, and you pick 1 hour you pick one candle in the 1-hour chart. That 1-hour candle is actually made out of 4 of the 15 minutes candle in the 15 minutes time frame. Yeah. And if you go down again, if you look at the 15 minutes time frame and you pick a candle, right, in the 15-minute candle, that candle is actually made out of 3 of the 5 minutes candle in the 5 minutes time frame. So if you go down again in 5 minutes time frame, if you pick one 5-minute candle, that 5-minute candle is actually made out of 5 of the 1-minute candles. So this is what I mean by fractal, that you can't actually disassociate your analysis with everything else. Everything is interrelated, right? And now I am not saying that you must always use all time frames to be able to trade. I'm not saying that at all. In fact, you can actually choose a time frame or two and use that as the base of your analysis. You can. I am just saying price will always move because sometimes price move beyond your analysis, beyond what you could understand, because in another time frame, in a higher time frame or lower time frame or whatever it may be, price has its own pattern or structure or key levels that exist, right? So if you don't identify on your chart, it doesn't mean that it doesn't exist. Thank you for watching, guys. If you find this video useful, hit the subscribe button and don't forget to like, comment, and share. Make sure you check out my other videos too. I'll see you in the next video.